Hi everyone, it's Stuart here. Hope you can hear me loud and clear. I was having some audio issues earlier on, but hopefully it seems okay again now. So a new week. Hope you all had a better weekend than I did. I was not feeling very well on Friday, and I went downhill very rapidly. Horrible Saturday night. A bit better yesterday, and back probably 80% on all cylinders this morning, and I'm okay at the moment. Still miserable, cold, damp, grey. February in the UK. So markets, it's all about President Trump, isn't it? Trump tariffs were promised on the 1st. He delivered, which is what he likes to do, or actually says what he likes to do. So 25% are blanket tariffs this time on his nearest and dearest neighbors. Mexico to the south and Canada to the north. Longest land border in the world between Canada and the US. Obviously, they go back a long, long time. But 25%, both Mexico and Canada, as I'm sure you all know, have retaliated accordingly. Trudeau, in particular, was very direct, and as direct as Trump about how Canada will deal with it. Mark Carney, similarly, prospective taking over from as leader of the Liberals, not necessarily the Prime Minister. Elections coming in Canada. Excuse me. Also very belligerent as well. So yeah, we'll see what we go. And then yesterday and this morning, or last night, Sunday night, Trump taking aim at Europe and the UK as well. So it's less so the UK because they're outside of the EU now, but they're not outside of his range of criticisms. Lots of other things going on. USA, huge budgets for overseas aid out of the US being scrutinized by Musk and his team. So lots of political fallout continues. Anyway, back to the markets. That threat from Trump saw great big gaps on the markets this morning. Let me just make me a wee bit smaller so they're see the chart a wee bit better. This is we took 2 trades on Friday night. Hope you saw it over on the our Discord channel. Let's just bring that up. On the Discord channel, I've lost the calendar now, haven't I? Oh no, I'm not. I've lost. Oh, you fool! I've lost the chart. Let's see there. Yeah, over on the Discord channel, we just talk about that while I bring the while the charts come back up. On Friday night, where are we? Oh dear me, Friday afternoon. That was here, wasn't it? These were the 2 short trades on Friday night. The pound sterling, which we just saw before it dropped out. Let me just reopen it. And there we are. This is what I was wanting to show you. This is the 15-minute chart. So this was our closing position on Friday night. We were at 123.90, no, 123.96. We got filled a little bit higher than the actual closing price on Friday night. But it's just the interesting. Everybody complains about slippage and broker always wins. Blah 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 blah. Well, in this case, he didn't. We were, I was personally in the money. So obviously my stop loss was here. My initial target was here, 123.58. I was looking for about 50 odd pips, I think, on it. But we actually got filled here just after the open last night at 123.08. I think it was 123.08 or 123.07, something it was. So obviously not as perhaps low as it could have been. It went lower than that. But obviously the opening gap, we saw this huge. If we go back to the 5-minute chart as well, drag it back, you can see, immediately on the open, much lower, and we continued to be weak most of the Asian session this morning. Sterling's actually come back a wee bit, and we're back to our target level, 123.60 currently so far. So that's when we benefited from a very volatile move. And as I said on Friday night in my post here, I also had another trigger on my personal trading platform over here. which was for the Japanese Nikkei. I don't often trade the Nikkei, but it pops up. Follow the rules as with any trading approach, guys. If you've got a system or a strategy that's, whether you're trading just one asset on one particular time frame, that's fine. My particular asset here, my system here, triggers looks at about 50 different scans, 50 different markets. One of the indices is the Japanese 225, Nikkei 225. And it triggered a short sell. It's not something I've done very often. So I just, given the uncertainty about what Trump was promising regarding tariffs, one was expecting that he would follow through with something, whether it's the full 25%, which indeed he has done on Canada and Mexico, and 10% on China. But obviously the ramifications were going to be technically or potentially a stronger dollar, a weaker stock markets, and uncertainty, gold rally, and we'll look at gold in a minute as well, all-time highs being taken out. So basically, I reduced my position size. It was 50% of the normal position, so that meant like 25% of a normal position for T1. So again, we gapped to that one. If we look at I'm trying to find this, aren't I? Look at the Nikkei under the indices. You can see it did exactly the same thing as the forex markets have done. We'll come back to gold in a minute. So our position was here again. So again, you can see here on the 15-minute, or even this the 5-minute time frame. We were filled here on Friday night at 39,341. Our initial target was a 3 here at 38,818, and I've actually got a note of that one. We got filled this morning or last night at 38,655. So all the way down here, 38,655. So a bit, here on. What's that? I don't know. Hello, we're back. Yeah, sorry about that, guys. I'm not quite sure what went on there. It's certainly not where I am at my home office today. Not my office, but there's nobody around. I've got a big fat pipe here at home. Anyway, these things happen, I suppose, don't they? Playing with technology. I don't know what we lost there, but basically, I was saying it's a half a position as I showed you here on the note I put up on 10 o'clock on Friday night. So it was only 50% of a normal position, and obviously we closed half of that 50. I'll update this later off. And FX Avatar, yeah, he's done quite well as well. I like I don't know if you're out there, Mr. FX Avatar or Miss FX Avatar, but I like this more than anything on your chart. Patience, discipline, execution, PDE. I've got something called PDC I talk about, which is patience, discipline, and consistency. So on some of my slides, so I've probably got that stuff, but it's a great 3-word mantra to live your trading life by, my friend FX Avatar. So the best of luck on your trading journey, and anything you want to chat about, please let me know. And hope you've got some pips in the bank on that move there. It looks like it. Certainly we did start the week off quite nicely on these end of month trades. So the main reason we're here today, it's PMI day today. You can see that again on the the calendar. So the Chinese data was a bit weaker than expected, came in at 50.1 compared to 50.5 last time. The European data has been overall better than expected, although as you can see here, still seriously in contraction. The German is the big, focus, being the big manufacturer within Europe. Obviously, France supports that area very well. So it's the EU number, but we've been as low as 38.5 for German PMI manufacturing numbers. We're still in contraction. Remember, anything over 50 shows that the sector's in expansion. So even the Chinese manufacturing sector is only just eking out growth. The main data we're waiting for is the ISM manufacturing PMI data. This one here that came out at Q2 from the S&P Standard & Poor's came in at 50.1, in line with expectations. It's just that calendar hasn't updated, but trust me, that's what it came out at, 51.2. Sorry, not 50.2. So yeah, it's reloaded, hasn't it? There we are, 51.2. So a couple of minutes, we'll wait for this. This is the key one, this 3 bull sign here. The PMI data out of the US. Remember, it's forward-looking PMIs. Although it's a sentiment index, it's still quite significant. And is it going to eke over the 50 level? That would be hugely significant sentiment tick in the box for US manufacturing if it does. And again, another trumpet that Mr. Trump can blow. So we'll come back to that in a wee while. Let's say, as far as the markets are concerned today, we've had a moves across the board. So just go up to the hourly charts. That's the DAX. That's the Nikkei over in Asia. In Europe this morning, we had a similar, obviously, gap on open and recovered some of it. Obviously, far from the opening close. So Europe's next in Trump's spotlight as far as tariffs concerned. How much of this will actually play out or not, again, it remains questionable in my view, for what it's worth. Last time it was a bit more specific about specific industries and specific types of tariffs. This time it's a big across the board blanket move. His move against Colombia was it only last weekend? Yeah, it was only last weekend, wasn't it? He's only been in business 2 weeks. Excuse me. Was turned around. So let's see. Obviously, it's much more serious when it comes to Mexico. Mexico, Canada, and China. Obviously, they are in a trade agreement, and that was negotiated under the last Trump administration, the North Atlantic Free Trade Association, NAFTA, as it was known for years and years. That is basically Mexico, US, and Canada. That was ripped up, and he put another one together, or they put another one together. All parliaments took a long time to ratify, particularly in Canada and Mexico, in the US, in fact. So that's going chucked up and ripped up with the president's Sharpie pen signing off that executive order. But anyway, yeah, stocks are weaker across the board. Nasdaq, the US markets have opened down. This is obviously the futures market. The Nasdaq 100 down here at 21,000. We had been as low as 20,800 this morning. The Dow at under 50,000. Under 44,000 significantly. 43,900. We're getting perhaps back there at the moment, but yeah, another one. And the S&P under the key 6,000 level this morning as we opened, and we remain anchored under there quite significantly. So a weak last week, and as you can see here on the daily time frame, it's the hourly time frame. Let's go back to daily. A week, inconsistent week. Lots of question marks on Friday. We closed negatively on Friday, and big gap down there. So see where we go from there, but that's a significant move. Some are talking about buying opportunities down here, that the tariffs won't hold, but certainly with Trump in the White House, volatility is more or less, or not more or less, is guaranteed. So let's have a look at the PMIs. So the manufacturing PMIs have come back in over the 50 level. So 51.2 for the for the S&P ones, and the more important ISM ones have come in at 50.9. Prices have ticked up as well. This one's coming at 54.2. So let's just refresh that. We can see it on the screen here. So 50.9 from 49.2. Which was actually last time, and prices again. The sign of inflation is still sticking around a wee bit. 54.9 from 52.5. So that's quite a significant increase. It's not enough to change the mood with regard to the Fed outlook. Now one, possibly two cuts, possibly no cuts still is on the card. Certainly not in this the first 3 months of the year, and possibly not in the first half of the year at the moment. So manufacturing back into expansion mode, and I'm sure when we see the president out and about on Monday, he'll be mentioning that already as well. Manufacturing eking into growth stages. Are you all still here, my friends? Yep, it's my stock markets are doing. So stock markets have weakened on that data. There's the 3 o'clock 5-minute candle. We sleep to the downside. Let's bring up what's coming on. So let's move lower. Let's look at across the board as well where we are. So dollars very much on the front foot. Euro 102.46 at the moment. Data came out 5 minutes ago. The initial S&P data there at quarter to 3, 14.45. Moved it low. So dollars back. Not that it was on the back foot, but the little rally we had up in the euro took it to 102.88, under 103 still quite significantly. It's not really made a blip on that. It's all really about the president, the tariffs, conversation he's going to have with Canada and Mexico, and obviously China, to move it forward. But they've become applicable from tomorrow. So I mentioned it. He's going to start from the 1st of February. They actually become into applied as of tomorrow. So a dollar stronger, euro down. Sterling 123.45 again here, moving down into its 5-minute 50p period. That's actually held today as we've recovered. So maybe some buys there, perhaps on sterling at this 50 period on this for 5-minute traders. It's held quite well today, hasn't it? Once, twice, 3 times. But this is the main data of the day. Having rallied, excuse me, back to our target from Friday at 123.58. Oh, excuse me. I thought it was much better than I'm actually feeling now. I'm talking to you all, so excuse me. So some tentative buys here potentially for sterling at 123.40. So it's happened once, twice, 3 times today. So interesting to see how that plays forward. So just make a note of that as we come back to it. Yen 154. So the 155 key 155 level has given way again. Interestingly, the yen move on open wasn't anything like the significance we saw with the others pairs, but we are down. We have breached 155, testing 154 last week, and was down again today, 154.40 at the moment on the daily time frame. So just going back to what we were talking about last week, we had these sort of potential bounces for pound yen. And it's pound yen for dollar yen. That's not playing out. If I just go back to the other measures and the daily crosses we had. So this is our leg up here for the euro, rejecting the 104, and we were looking for this move down, and obviously the tariff threat has actually sort of blew that out of the water, but again, you know, those target downsides have been hit all in one day's move. So that very much was actually a fib level, and again you can see the importance or not importance or the significance of fundamentals sometimes. You know, the political situation, the sentiment situation can sometimes override, you know, some obviously technical situations, but that's, you know, proved to be the case. So what's that telling us? Well, if that leg is still valid, which it is from a fib point of view, we still have broken the lows here on this morning through the non-farm payroll low on the beginning of January took us to this 101.80 level. You know, the argument that you know, we're getting to parity is potentially stronger. So the next level down, once we break through this level, if we do get there, it's looking more like it would be this next leg here under parity at 0.9979. So parity is becoming more of a likelihood, if you like, technically, on the what we've seen today. But obviously today isn't finished, so we can't make any decision on that. Those systems shouldn't, any daily system shouldn't be making any decision on that. And it is a gap, and gaps can be filled, tend to get filled. You know, he could suddenly flip back, or there's suddenly a cooling of things. The tariffs on EU aren't as bad, so therefore this particular chart might flip back. But we can see this in all of these daily fib levels we put on from last week. Big move down, and we've bounced here in sterling. So, you know, sterling's stronger than euro because it's not going to be as impacted. Or that's what he said. It's not going to be as impacted as the euro area. But so obviously the euro area is a bigger trading partner. Much more trade goes between the EU and the US than the UK and US does. So sterling doing relatively better than the euro. And the Aussie as well. Did we do the same? We did do the same thing with the Aussie. There we go. Aussie already breached its non-farm payroll low here under 61.13, and next level down is 0.6025 or 0.6026 here. I was talking randoms, don't I? For the Aussie. So again, the technical setup we talked about last week has been added to by the fundamentals is basically my point. So yeah, dollar strength looks like it's going to continue. And the result of that is obviously the weakness in the stock markets, and then the sort of oxymoron, but the consequence of a stronger dollar is also showing a stronger gold. And this is the strength in gold to do with the geopolitical uncertainty that's going on. So the strong move we've had in gold last week has just carried on. So remember what we were saying last week, or what we say all the time, you know, just because something's got to an all-time high or just something's got to high doesn't mean it's going to retrace. You know, higher prices tend to lead to higher prices, lower prices tend to lead to lower prices. And this trend, as we've been saying for a long time now, is very, very set. It's been a stellar start to 2025 for the gold market. As we've been saying for a while, the breach of 2700 was the key. And then we've had some really strong, big, powerful candle days. There's the 21st. That was Thursday last week, wasn't it? On the 30th. And then a strong day today through the 2800 psychological level. We breached the all-time high as well on Thursday. And breached the key 2800. So again, you know, trail that stop loss up. Stay on your surfboard. The gold market doesn't look like turning around anywhere soon. In January, February, traditionally quite strong for the gold market. Anyway, Lunar New Year, the Asian New Year, lots of gold is given as presents and in celebrations as well. Anyway, but this is more to do with the uncertainty that Trump is bringing to markets potentially. Although we've moved into oversold here on the this RSI at 72.60, doesn't mean we can't go any higher. So, but we are at new all-time highs for gold, and it continues to track. So if you're trading this on an intraday basis, you want to be looking on the shorter time frames, looking to take long trades rather than short trades. But there's been some big moves because you're with the higher time frame trend. So if we're looking at this on a 15-minute chart, you can see, if we just re-gauge that, you can see here, just using this very simple crossing moving average strategy, that was a big buy this morning at 8 o'clock. So you wouldn't, again, if you're in Europe or in, down the GMT timeline in Africa and other parts of the world, you've just been trailing this up all day. Basically, we haven't crossed the moving averages here on this strategy. Haven't crossed. We've just been extended. If you program this to trade for you, that would have been the first cross here on Friday morning. Then crossed the 20 period moving averages, or 21 EMA here at 5:15 on this morning. So I'm saying Friday morning, it's this morning I'm talking about. And that would have taken you long, and you'd be long all the time because we haven't come back. You would have closed out there as it's gone under the 9 period. You would have got back in there as it's gone over the new all-time highs here at 11 o'clock this morning. Immediate retrace, as you might expect, but again, we haven't closed under the green line, the 9 period moving average since 10 o'clock when we retraced a wee bit. But you're certainly in the money if you're long on gold, and that's as simple as it needs to be. You don't overcomplicate things. When markets are trending, they trend and they can run and run, and gold is a great example of that, despite being really overbought technically here. 87.6 here on the 15-minute time frame, probably less so on the 84 on the 30-minute time frame. So take your asset, have your system, apply your system to your asset, and follow the rules. Accept your losing trades and bag your winners. Don't get out too quickly. I was speaking to somebody over the weekend in my muffled state, and they were saying about, I still panic when I'm suddenly in the money, having been out of the money for a long time. I said, he said, "What can I said, I can't advise you. I'm not allowed to. I'm not qualified to do that. I haven't got a registration in the UK to do that." But it's human instinct that differentiates the successful traders from the weak traders. And basically, my suggestion was just let things run, give them time to run. Don't get too carried away. And again, this is a good example actually here on this gold chart. Lots of people would have panicked on this big candle here at this one that's just closed at 3 o'clock, because it's so big, because it's gone to new all-time highs. There's no need to get out yet. If you're trailing this, the stop loss should be around here. Yes, you're going to give some dollars back as it retraces and gone back to it, but if you get too close, you get took out too quickly. So yeah, if you've been trading this all day, but there's an interesting level here where it spiked high here on Friday. Friday's high there, we got to 28.16 intraday. Didn't close above 28 to close the day out, so it had a first breathe above 2800 on Friday, and then it closed quite significantly lower, didn't it? As cash and profit was taken off the table for the weekend. We've gone through that, so that is now a key support area, I would argue, 28, 16, 91 here on the shorter time frame. So whatever time frame you're trading, just accept you're not going to win every single trade. Even winning 60%, your 6 trades out of 10, you can make a very, very good living out of trading markets, and anybody can learn to do this. So do come and join us. We're here to help you, my friends. So that's Monday's main news. The ISM manufacturing data from the US is better than expected. It's been better than expected across the globe this morning. Not significantly better, but overall, the tilt has been to the upside. Chinese markets are back tomorrow. I think I'm saying tomorrow. Yeah, I think China is back tomorrow. So that'll bring in Hong Kong as well. So the onshore markets in China will be back tomorrow. Let me just recoup the main events of the week. Sorry. Obviously, we've got the Bank of England later on this week as well. Let's apply the the 3 bulls. So tomorrow, tomorrow's Tuesday. We got the JOLTS report. Remember, created by Mrs. Yellen. Her former Treasury Secretary, former head of the Fed. I'm sure you all know. Again, perhaps less significance now that she's not in those positions. But remember, JOLTS is openings, the number of vacancies in the market, the churn. It also captures people moving from job to job as well. Went under or back over 8 million last month. Expect to slip under 8 million this month. This ongoing chatter about the tightness in the jobs market, but we'll find out what the big numbers are saying later on in the week when we get ADP on Wednesday, and we get obviously non-farm payroll on Friday, and the weekly claims on Thursday. But before that, tomorrow, Wednesday, we have the services side of the PMI data this week. Services more significant, much more significant than manufacturing when it comes to economic performance of a country, the GDP, the performance of the country. So watch that tomorrow. Wednesday, I should say. Thursday, as I say, we got the Bank of England. I'll be live for that as well on Thursday. This week, I'm going to be live in the evening. A lot of you have asked, we're at work or at university or we're busy during the day, so can we do some more stuff in the evening? Tuesday, tomorrow, and Wednesday, the 5th, I'll be live around about 7 o'clock Universal Standard Time, GMT, 7 o'clock here in London. So do join me for that tomorrow. We'll do some live trading tomorrow because there's no particular news rattling around at 7 o'clock tomorrow and Wednesday. And we'll obviously review the data that's come out. So join me for that on Wednesday. Private payrolls, the ADP number, that's the big one for Wednesday. 150,000. Expect a little tick up from the 120,000 last month. And then the key US PMI data is the services. They call it non-manufacturing services as well on Wednesday. Thursday, I say, is the Bank of England. I'll be live for that during the day. Then Friday, obviously, we'll be live for non-farm payroll and a cooling of the big blockbuster number we had last month is expected around about 150,000 again for non-farm payroll on Friday to bring the first full trading week of February to a conclusion on Friday as well. So see you all then. See you all tomorrow. So it's 7 o'clock tomorrow night. 7 o'clock tomorrow on Wednesday night as well. And we'll see how the markets go. So have a system, trade your system. Don't be afraid of being stopped out if you're trailing this up. So again, to come back to this example we were talking about before, the 30-minute time frame. Certainly my stop loss would be round about there on this gold market today. But I'm an end of day type trader, and we've been doing quite well recently. So I'll say we had strong, better than we expected returns. Not that we were expecting the returns all on Monday, but from our two trades from Friday night, we've had better. So it wasn't T1 that was hit, but T2. Sorry, T2, but it's extended because of the gaps. And we'll see. I'll update this blog as well and just see what else is going to come tonight. If you're watching this live at the moment, there's not many of you here. I'm not quite sure if I'll see what's maybe rolling over as a potential trade tonight. It's crypto. I don't want crypto at the moment. Sorry, on my systems are still. Yeah, it's jumping around as you might expect at the moment. Yeah, there's nothing triggering tonight because of the gaps on the move. There's just the two from Friday night still, so nothing particularly. The tighter one is a few tripping about all over the place here, but yeah, I won't bore you with them at the moment. Interesting one that's immediately caught my eyes. The S&P 500 is looking for a short position tonight. Nasdaq also short position tonight potentially. But anyway, I will update you all tonight when that position closes. So best of luck, everyone. As I say, if you're new to prop trading, you're new to thePropTrade.com, we are here to help, my friends. And we want you on board. Give it a go. You know, it's a very effective way of testing yourself as a trader. Somebody put a comment up on the Discord group about one phase for the Pro Challenge. We don't do that at the moment. It's a two-step phase. You know, I understand people want to do things quickly, but part of the tens of thousands of losing traders I've spoken to over the years is their impatience. So, you know, I mean, obviously the rules are relatively the same. It's just you're only doing it in one step. So your targets are higher with the Express Challenge, if you see here. So you've got a 12% target. The two-step, you've got 2 steps, but you've got a 10% and a 5% on the second challenge. So some people say, oh, that means I've got to do it twice and I can still get dropped out. Yes, but you are proving yourself all the time. Okay. So there's no rush. And I say challenges start from $55, but that's only for a $5,000 account. You know, 25, 50,000 gives you that ability, as I say all the time, to you know, trade more markets that you may not be you know, familiar with. If you're only trading one particular market, again, it doesn't mean you don't have to trade these bigger accounts, but you know, for the sake of $300 to get a $50,000 account and trade with real live data, you know, that's very, very appealing. So do come and join us, my friends. We are here to help, and we'll see you all again tomorrow, 7 o'clock tomorrow night, for some more live trading. Okay, so let's we still, no, it's coming back, but we're still okay with that one, aren't we? So let's have a finish with what we did with our sterling on the 5-minute time frame. There we go. So we called that one as well, didn't we? The 5-minute on the. Remember we were saying this is it's supported 3 times, 1, 2, 3. It's held, and we got a big old left leg up here. Somebody's said something clearly, perhaps the because there's no data come out at 3:15. So presumably somebody in the US government has said something, or something in the UK government said something, but there we go. I don't care really. I'd have bagged that as we've gone back to our entry on Friday night. So interestingly, sterling has recovered. It's a really interesting point. Recovered all of the losses that it suffered because of the emotional reaction to Trump's tariffs announcement over the weekend. So sterling is back to where it was on Friday night's close. Euro also, so something significant has been said, and my feed is not updating. So yeah, something significant happened in the last 5 minutes. Let's move those forex markets. It's weakened. The dollar yen done a similar thing. Dollar yen indeed has done a similar thing. Dollar's up here against the yen. So the yen, try to see how what's happened there. Dollar yen has rallied, but pound yen has rallied. Sorry, pound sterling's rallied. So a bit of disparity on the movement. So perhaps it's something out of China, because yen has weakened. CAD has gone the other way. So dollar's weaker against the CAD, the euro, the Aussie as well, presumably. The Aussie, yeah, but it's up against the yen. So I will investigate that and stick a note up on the Discord group in a minute when I find out what's caused that. If I do find out what's caused that, to be honest. Okay, take care, everyone. We'll see you soon. See you tomorrow. Take care. Be good. See you soon. Bye bye.